IAG is a share that I've been tracking since the pandemic came about. It was down about 80% from its highs up here, with the lows being at around 90p. But since that, from the highs, so from the lows to the highs, we bounced 140, 150%. We've had some really good days in the past, or weeks in the past, where we've seen the share price rise 20-30% in a week. But at this moment in time, it's looking a bit sluggish, and it's looking a bit sad, should we say. And given that we're also in August and volume is low, where we currently sit, which we was down 29% at one point, we're down 23% from sort of that March high. It begs the question as to where we go next from here. Can we continue higher, or are we going to go lower, or are we just going to consolidate in this area? I'm going to look at the technicals today and just a quick look at the most recent half quarter of the balance sheet. The half year that they published in June of this year, just to see the actual performance of the company. Overall, it's okay. I would be a buyer. However, there's definitely going to be headwinds in the way. It's the 5th of August. My name's Tyrone, and you're watching Minipip. Jumping straight into the video, one of the things I actually wanted to look at was the name, because International Consolidated Airlines, they are primarily doing international flights, and as a result, it means that going forward, international travel is probably going to be the slowest returner for airlines. And the problem being is that within IAG, you've got Aer Lingus, you've got British Airways, you've got Iberia, and then you've got a few smaller airlines. But the problem being is that the bulk of their revenue pre-pandemic was international flights. But obviously they do the getaways and stuff like that, and the holidays abroad in Europe. But as you can see, if we look at the most, we're comparing 2020 H1 to 2021 H1, we've seen this nearly 75% decrease in passenger revenue, but yet cargo is up, and that's probably because of the amount of logistics through people buying things online and IAG being able to utilise potentially some of their planes for cargo travel. So even though cargo is up, one of the issues with IAG is that it is an international carrier. So unlike Ryanair and EasyJet, you're going to have the delay in terms of passenger revenue and the passengers coming abroad and going sort of to America and Asia and stuff like that. Overall, though, they took a two billion euro loss, whereas the previous year they took a 3.8 billion euro loss. So the loss is getting smaller, which is good to know. And when we look at the balance sheet, there is a couple of issues that I see. So assets are up, which is good to know all the time. If assets are appreciating, that's what you want to see. They're only up around 1.1 billion as such, with total assets up around 3 billion. And a lot of that's coming in the most recent quarter. And what you'll find is that cash equivalents is up around 2 billion, which is making up. So you've got 1 billion on the long term, which has been added to the assets, and you've had around 2 billion added to the short-term assets, which is things that could expire in the next 12 months, giving them 33 billion in assets. You can see that pre-pandemic December, they had 35 billion. They went down to 30 billion, and they've just pulled it back up in the last 6 months, 10% on their assets. But the issue is that their debt, their liabilities has gone up. And one of the problems is the things is, even though it's non-current, which means it's sort of something that would expire as such over 12 months, you've seen this massive increase in their borrowings from 13.4 to 17.7. So they've borrowed in the last 6 months, they've borrowed sort of 4.3 billion euros. And even though the cash pile is up, that has to be likely paid back at some point. So as a result, you've got this liabilities coming in at around 32.5 with a liabilities coming at 32.5 with assets coming at 33.4, leaving them literally net positive 900 million, if that. If you look at the previous quarter, so going into the year, it was slightly better at around 1.5 billion euros. So they've actually worsened the balance sheet, and they have got a little bit worse from that point of view. But overall, with the loss coming down and cash on hand still big at 7 billion, there is a potential that they could go negative, but they could still afford another probably 2 years before there would actually be some serious issues with cash flow, because with the amount of money that they've got at the moment, I don't think that there's too much of an issue there. So in terms of them going bust or needing serious aid, between now and the end of the year, it's unlikely that things are going to get worse for the company because of that cash pile. Debt isn't great, but it is what it is, and most airlines are in that position. Now, looking over to the chart, hopefully that balance sheet is reflected in the share price and gives investors support, because that's what we need to see. There isn't really a trend going on as such. You could argue that there's one developing here where you have support around 156. So £1.56 is where your support sits, with a resistance at these moving averages at around 185. Push above there is taking you to £2.13. £2.13 is going to be tough to crack, because you can see that we wasn't able to do it through March to sort of May. We just couldn't break it to that 213 level. And a break above there would be that resumption that you would need to see this go higher. But if one of the indicators that I wanted to use on this was a fib, because it actually ties in quite well, and it's the retracement from the peak here to the low there, and you will see that coincidentally where we sit at 172 and where we sat at the last this July is 169, £1.69. If we break below this and we close below this, we could head towards £1.43, and worst case scenario, we head back to the lows of 88p. I don't think we'll get down there. I think it's unlikely, and if we did, then that could provide an amazing opportunity again to buy a really good airline as such that would be bailed out, because it is a flag carrier for 3 countries in Europe. But this 170 level at this current moment in time, it is holding, and we do need a catalyst to go higher, and I don't think this is going to be in August, so it's likely that we're just going to hover around here in August. But what I would like to see is a push up in September, October, potentially as lockdowns are lifted in other countries. So I know that Canada, for instance, are allowing international flights in September. As vaccines in America get better and as Asia starts to improve, you start to see international travel pick up. As a result, potentially we see it back to these highs at around 220 to 210. Now that is the target, and that's the target that you want to be aiming for as such for this year. It's unlikely that IAG is probably going to climb past that this year, and if we do, then you want to be aiming for 260. But that's probably going to be 2022, going on 2023 before we see that. It's probably, as well, again, if you look at the past trend of IAG and even pre-pandemic, you can see that it took from that low here, it's taken not long to get back up again. But if we actually look at the general stance from 2012 to, let's just say, £3 a share as such, from there it's taken 2.5 years to get there. We've already covered 1 year, so there could be another 1.5 2 years before we even get to this 253 level where the fib was originally. So overall, it's a buy, but there's definitely headwinds ahead. Where we sit at the moment at 160 is the is sort of the floor, and a break below there takes us towards one sort of that 146 level. If you're in here, then you could potentially increase the position at 145, and again increase the position at 90 odd p, which would bring your average buying price down. But if you're in already, it's one of them where you're going to have to buy and hold and wait, because it's going to be a slow moving stock. It does have potential. It's one of the biggest traded shares in the UK. It generally speaking, it's in the top 3 along with Lloyds Bank. But overall, you're going to struggle this year at £2.13. A break above 2.13 takes us towards that 2.50, then £3. But that's not going to be anytime soon, I don't think. I will be tracking this on MiniPip over the next couple of months as well. So I'll be doing updates, technical analysis only updates on IAG. So if it is something that you're interested in, make sure to subscribe to the notifications on the website, and as well, I probably will post more on YouTube about this as well as it develops over the coming months. It's the 5th of August. My name's Tyrone, and thanks for watching.